Hey there, welcome to Kneppy Invest. SelfWealth have released their Appendix 4C for the December quarter. Share price is down or was down 10% on the day they released this quarter report. And to be honest with you, when I did read what SelfWealth had to offer, I came away not too impressed. Now, for full disclosure purposes, I'm not a shareholder of this company, but I do use a SelfWealth platform to trade, buy and sell my shares. And the reason I do that is because I used to be or use CommSec. CommSec charges up to $20 a trade. SelfWealth charges $10. Actually, it's $9.95 a trade. And if I find a broker in the future that charges $0, I will move to that broker. So I don't have any loyalty to SelfWealth. I had no loyalty to CommSec, although I do still use CommSec platform just to do some research. So let's get stuck into SelfWealth. But before we have a look at their Appendix 4C and some of the financial data for this company in financial year 21, just a few facts in regards to this company. For those who don't know, SelfWealth is an online share trading platform. I have a feeling they're also trying to get into Bitcoin or cryptocurrency, I should say, trading as well. There was talk of that. You can trade Australian companies on the ASX and also international companies. I'm not sure how widespread or how many exchanges around the world you can trade on. Now, this company was founded in 2012 and has been listed on the ASX for about 4.5 years, and currently, and this is the most interesting thing about SelfWealth right now, is the market cap at 26 cents at the end of trading on the 17th of January is only $60 million. And that is possibly getting towards a valuation that I might get interested in taking a position in this company if we see sentiment turn around. And that's the major negative thing about SelfWealth right now is there is quite a bit of negative sentiment when it comes to this company. And the ticker code for SelfWealth is SWF. Let's just glance at the financial year 21 numbers for SelfWealth. Revenue climbed quite impressively from the previous year, increasing from 7.8 million to 18.4 million. That was helped because of COVID-19 financial panic. And you're able to see those tailwinds this company experienced during that period when we look at the cash receipts history. They were operational cash flow positive in financial year 21. And that was exciting to me because maybe that was the inflection point for this company. Now, it will surprise me if SelfWealth is operational cash flow positive for financial year 22. More than likely, they will increase their revenue, but not by a significant amount. But this company is spending a lot more money in financial year 22, and we're able to see that when we look at their most recent Appendix 4C. They were barely loss-making in financial year 21, only loss-making by $300,000. They did have $7.5 million of cash. That actually has increased in the past 6 months because they did a fairly big capital raising, and the price-to-sales ratio not too high at 4.1. So now let's have a look, not at the most recent Appendix 4C. Let's just go back 1 year in the past to see how this company was doing at that point in time. And to be honest with you, about a year ago, around that time, I was a little bit interested in SelfWealth. And the main reason I was interested in this company was how close they were to being operational cash flow positive on a consistent basis. Receipts to customers had climbed a fair bit during the calendar year 2021. We ought to see that when we look at the cash receipts history in 2 slides' time. But in this particular quarter, they were only operational cash flow negative by $29,000, but they also received $154,000 of government grants and tax incentives. But they were close to being operational cash flow positive, and the cash on hand actually increased in this quarter by $800,000 because they did exercise some options totaling $933,000. So 1 year ago, things were looking quite good for SelfWealth. At this point in time, the share price was quite high as well. But calendar year 2021 was not kind to this company. We'll have a look at the chart later in the video, and you'll be able to see the share price of this company has been in a well-defined downtrend. And one of the reasons why the market has not been kind to SelfWealth is they have not been operational cash flow positive during this last year. In fact, they've really increased their spending and they're highly operational cash flow negative. Now, so let's have a look at the December quarter for the current financial year, and you'll be able to see that. So even though they've increased the cash receipts, they're highly operational cash flow negative right now. And here we are, and this is the reason why the share price fell 10% on the day the company released this particular quarterly report. Even though cash receipts rose by 600,000, we did see significant increases in some of their costs. Product manufacturing up a little bit, 400,000. Advertising up 700,000, but it was staff costs that had increased by a fair bit. In fact, it increased by $1.6 million. Administration costs up 100,000. So if you total all the increases of costs, it adds up to over $2 million. And that's why SelfWealth was operational cash flow negative by $2.4 million for this quarter. So even though receipts had grown from 1 year ago, the costs had grown at a greater rate, and that meant the company had gone from being cash flow neutral to being highly operational cash flow negative. They also did a fairly big capital raising in the September quarter, raising $11.7 million, and that meant the cash on hand actually did climb from 1 year ago, and currently it's at $14.9 million. Now let's have a look at some of the metrics, some of the important metrics, including active traders, quarterly trades, and client cash. The thing I'm really interested here is quarterly trades. Even though active traders and client cash are increasing, we are seeing the trend of those who are trading through SelfWealth are actually trading less often. And that is actually bad news for SelfWealth, because they do drown most of their cash through people trading, spending $9.95 per trade. And in actual fact, active or quarterly trades fell by 3.2% quarter on quarter. It did grow from 1 year ago. In fact, the only numbers or changes they do show in the key financial metrics is year-on-year change, and the quarter-on-quarter growth or change, I actually had to calculate that myself. But it's really noticeable that quarterly trades did decrease from 1 quarter ago. We'll have to wait and see if that trend continues, but it's just showing us, or showing really everyone, that people are starting to trade less and less. That frothiness, that active or overly trading period we did see after COVID-19 financial panic, when everyone was getting excited about the markets, a massive increase in retail investors, that sort of hype has died away. And even though people's or clients or customers' cash within SelfWealth is climbing and active traders is climbing, we're not trading as much. And that is actually bad news for SelfWealth. And when we look at the receipts history for SelfWealth, this does go back to the March quarter 2017. We did see some okay growth from that quarter. They began the life on the ASX all the way to the start of 2020. In fact, receipts grew from about 40,000 all the way up to 1.2 million. And then we saw massive growth in receipts during the COVID-19 financial panic, particularly the first 2 quarters of the calendar year. So that's the March quarter and the June quarter of 2020. In fact, receipts climbed from 1.2 million to 4.2 million. And that's the period of time where the market got really excited about this company. But one of the reasons why we did see cash receipts climb by or rise by a significant amount is just that massive increase in the amount of retail investors in the ASX. And that increase in the amount of retail investors has slowed away. And not only has the increase in retail investors started to slow, we've also seen those retail investors not trade as often. And that's why receipts are not growing as quick right now. They're still growing at a fairly slow rate. In fact, when you calculate the growth in receipts over the past 2 years, we do see or we do calculate a 3.3% growth in receipts over that 2-year period, 29% growth since they listed on the ASX way back in 2017. The main concern here is over the past 4 quarters, receipts have gone sideways. From that record quarter in the March 2021 of 5.8 million, receipts just have gone sideways. And we need, and SelfWealth have to prove that this growth in cash receipts that we have experienced over the past few years is continuing. And I think the market is a little bit dubious that SelfWealth can show us that exact thing. Now I'm just going to show you a couple of charts, and the first chart here is the weekly chart of SelfWealth from the time they listed on the ASX way back in the beginning of 2017. And I've actually not included any of the moving averages, and the only line I've included here is a possible support level at 26 cents, which funny enough coincides with where the share price closed at the end of closing on January the 17th. And the reason why I'm calling that support is that's the price that the company or SelfWealth shares traded at the peak back in September 2019. The share price fell away just prior to the COVID-19 financial panic and during the panic. And then because of that massive increase in retail investors around the time of the panic and just after the panic, we saw the share price of SelfWealth increase from 10 cents all the way to a high of over 80 cents. A nice 8-bagger for those who held during that period and then sold near the highs. But ever since that high of 80 cents that was reached in about August of 2020, share price of SelfWealth has been under pressure. And in fact, the share price has been in a well-defined downtrend since the start of 2021. So now let's have a look at the daily chart, and you'll be able to see how the share price of SelfWealth is in a well-defined downtrend. And there's no reason right now to take a position in this company because that downtrend is intact and doesn't look like it's breaking anytime soon. So this is the daily chart going back to May 2020 when the share price of this company was in a nice bull run when the share price increased by 8-fold from about April all the way to the high in August. So about a 4-month period, share price of this company increased 8-fold. And between about August of 2020 and June of this year, the share price of SelfWealth was in a ranging pattern. We saw the share price reach 80 cents twice back in August of last year, and then again when the company released their half-yearly report on February 19 of this year. And it was really interesting trading that day because the share price opened at the high, and I think it was about something like a 5 to 10% increase on open. So initially the market really liked their half-yearly report, and that typically is going to be retail investors who see some sort of numbers in the report, get too excited and buy straight away at open. And then the professionals come in, they read the report, they don't like something they see, and they drive the share price down. And that's why the share price actually fell 11% on that day, even though at open it was up between 5 and 10%. And that was the sell signal. And from that day, the share price of SelfWealth has been dropping. There's been a few negative reports from the company, in particular Appendix 4Cs. For instance, the July 12 Appendix 4C, the share price fell 12%. And then on January 17, when they released the December quarter, the share price fell another 10%. And you just see by this chart, and I've included the 3 moving averages, which is the 25, 50, and 100-day moving average. The share price is below all 3 moving averages and is continually falling. So this is a well-defined downtrend, and the share price right now at 26 cents is at least a 1.5-year low. So right now, no reason to take a position in this company right now, unless maybe you're a deep value investor and you think there's really good deep value right here. But this is sort of like a don't catch a falling knife situation. We just don't know how low the share price will fall from here. And until I see signs that the sentiment is shifting, until I see signs that SelfWealth increasing in spending, employing more staff so they can, I don't know what they're employing more staff in doing, but whatever they're doing, spending more money in, that needs to show that's going to increase in their cash receipts. So I need to see an increase in cash receipts to justify the increase in spending they're doing right now. And at this point in time, I think the market is a little bit skeptical about this company. Another reason I'm a little bit skeptical about SelfWealth right now is just competitors and the growing threat of someone coming in with zero fee trading. I think the greatest threat would be CommSec, and if CommSec was smart, they would do this. And if CommSec did this tomorrow, SelfWealth and some of these other platforms would be under serious pressure, and I think more than likely a few of them would go bye-bye eventually. But CommSec, because they're a big player, I don't think they have that foresight to think about those sort of things. They just want to keep their current clientele paying $20 per trade. They don't mind them doing that. But eventually, someone will come along with a platform that you will pay only zero amount of money to trade on that platform. And when that happens, when that platform comes along, I will switch almost immediately. That's all I have for this Appendix 4C, December financial year 22 update for SelfWealth. Share price was down 10% on the day they released this quarterly report. Fair bit of negative sentiment right now in this company. Share price in a well-defined downtrend. So there's a lot of things not to like about SelfWealth right now. And I am concerned about the future, particularly, again, if we do see zero-fee platform come into play. There is a zero-fee platform when it comes to ETFs. That's, is it Superhero? So if I was an ETF investor, which I am not, I would not be trading through SelfWealth. I'd be trading through Superhero. So if you do have any questions, concerns, or you think I'm completely wrong about the future of this company and my opinions about them being under threat in the future, if you think I'm completely wrong, I'd love to hear your opinion, because I could be wrong, and I like to hear different opinions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you are a financial, or you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.